everyone. It's really glad to see you all here, and I'm honored to be the first speaker for this session. So my name is Dilin Wu. I research strategies at Pepperstone. So probably some of you might recognize me from the As Good As Gold videos, right? And obviously the past panel discussion must be good. But unfortunately, I cannot speak Thai, so I didn't join them. And I need to use the AI translator to translate English to Thai. So because I used to speak really fast, so I will try my best to control my speaking tempo. But if things like I'm speaking really fast and the subtitles are trying to get me from the back, please excuse me. I'll try my best. Stu, to give you a little bit introduction about myself, my major focus are actually the US and also the APAC market, with keen interest in central bank policy, US and Hong Kong equities, forex and gold, among other cross assets, and also cryptocurrency investment. So I feel like I pretty much covered everything. But anyways, if you have any questions or you want to share your insights about the market, and I'm more than happy to discuss and share opinion with you. Well, hopefully not too bad. But before that, today I really want to share my thoughts on some market outlook in 2024. Q4, including some trading themes that could shape the market landscape, and also some potential opportunities to keep on radar, as well as the mindsets I believe are crucial for trading. So hopefully this will help to set the stage for the gentlemen after me to give them a smooth leading to talk about specific assets or strategies. So let's get started. Yeah, so the first thing I want to focus on, and the most important thing I reckon from my own perspective, both as a strategist and as a trader, is identifying the key trading themes in the upcoming quarter. So probably you will think, oh, this two characteristic or this two positions sounds really different. Well, I would say it is. Because as a strategist, my main focus or my job is to really to price the possibilities of shifting market regimes and provide directional insights. But as a trader, my job or my main goal is simple: make a profit, right? So while macro stories don't actually tell me when exactly to enter or exit a trade, but they are the backbone of how I choose strategies, manage my exposure, and time my trades. So for example, in some low volatility market condition, I tend to choose like mean reversion or swing trading. But with market condition with greater volatility, probably momentum trading and some intraday opportunity will catch my eye. So what I want to point out here is I think these insights are just as valuable for you all as traders. Actually the first theme I want to highlight for today is how the market is pricing in US recession risks and a global economic slowdown. And actually before I dive into this topic, I really want to ask a quick question. So who here still remembers the big market drop on August 5th? Show of hands, please. Thank you. Okay, I got to here. Okay, so I really, I truly hope it didn't hit your position as that much, but frankly speaking, this graph, like the drop down in Nasdaq on that day, totally wrecked my European traveling plan. So, I mean, a day trip in Melbourne is not that bad, but it's Europe. So anyways, what I want to point out here is that aside from unwinding of yen carry trade, actually one of the main reasons we witnessed that significant drop in the early August was because the US just delivered a really poor July non-farm payroll number, which intensified fear of recession. And it just goes to show how sensitive the market is to any shift in, especially the negative shifts in the market condition. So if you ask me, could it happen again? My answer would be yes, absolutely. Why not? And actually, out of all the U.S. economic indicators like GDP, services, and manufacturing PMI, what else like retail sales. So the one I personally pay close attention to is the unemployment rate. Why is that? So if you look at the chart showing on my left-hand side, so the blue line actually depicts the U.S. The 3 months average U.S. unemployment rate, and the red shaded area highlights the period of recession, and you can also find the recent COVID era highlighted in this red shaded area, and also the GFC back to 2008, 2009, and actually. Always nice. That's why that was my favorite label. Yeah, so here's actually the key insights I've drawn from this. So if we take a look at this chart, we can see the unemployment data rightly favor. So by that, I mean it's either trending upward or downward with very few reversals. And in other words, high employment rates also always lead to even higher unemployment rates, and the reverse is true as well. And most importantly, at the early stages of the climbing unemployment rate, like recessions tend to follow. So if you look at this chart, when the blue line is about to go up, it's always followed by the red shade area, which depict the recession. So concerns, like from my perspective, because like over here, we're just at this very stage. So the blue line, the unemployment rate is about to hike. So I think the concerns about the U.S. economic growth in the future is absolutely not misplaced. And meanwhile, we're seeing a global economic slowdown taking shape. For example, the Europe Q2 GDP growth with mega 0.3%, and over in China, the property issues in China is always terrible. And it's casting a long shadow on the Chinese economy from any swift recovery. And if we take a look on anywhere else in the globe, for example, New Zealand, they are grappling with probably the darkest economic hour at the moment, and they are teetering on the edge of recession. So I think these issues are likely to last to the end of this year. So to try to and boost the economic growth and save the economy from any further recession or any worsened scenarios, actually 7 countries in the G10 have already cut rates, including the Fed last night. So looking ahead, I believe the market's next big focus will be the central banks, especially the Fed, on how much and how quickly they will cut rates by the end of this year, right? And I think probably some of the folks even wondering if the Fed has already moved too slow or cutting rates too late. So why this is a big deal? What will happen if they cut rates too late? With the U.S. economy slowing down, many of the influx of the immigrants, probably some of them might not lucky enough to get a well education. So this group of people will flush to the job market, but they couldn't, or it's really hard for them to find a job. So they will pump up the unemployment rate. And higher unemployment means less consumer spending, but I believe many of us already knew that the US economy was supported by consumption highly, I would say around 70% or even 80%. So that's a big issue. And because, people cannot find a job if the Fed said, okay, I'm going to cut. I realize I cut too late, but it won't help much because people already lost their job. Like, for example, I can buy one apple for 20 baht at the moment, and after the Fed cut rate, I can buy it by 10 baht. But I have no income, so I'd rather don't buy anything. So that's a huge problem for US and also for the global economy. And from a peso perspective, I think the Fed is still in control, but they couldn't take any worsened conditions. So I think that's probably why the Fed's cut by 50 basis points. So it's like on the higher expectation or the higher end of the market consensus. And take a look at the chart on the right. So it's I combined two charts actually. So the upper part is the real funds rate, which is equal to Fed funds rate minus core PCE inflation. And we can see it's at the new high not seen since 2018. And the second half or the lower part of this chart is actually the policy sensitive 2-year US Treasury yield minus, actually this should be the opposite. So the US 2-year Treasury yield, which is policy sensitive, minus Fed funds rate. And probably the number is a little bit small, but it's actually negative. So what's our take from here is when inflation is coming down, which is depicted by the core PCE inflation or the PCE deflator. This number is going down, but the Fed's funds rate remains relatively high, although they just cut by 50 basis points, but it's still quite high. So it will make the real rates. So the rates of the US is actually tightening mechanically. So they don't want to see it, but it's tightening. And also the fact that the short-term treasury yields are lower than the neutral rate or the Fed funds rate means there are a lot of needs in the treasury yield. So both of these two scenarios are not doing the US economy any favor, and the Fed really needs to cut rates more urgently. And furthermore, with the first debate between Trump and Harris wrapping up on September 10th, and the Fed just delivered its first rate cut yesterday. So the US election is really starting to heat up for traders. So if we go to the next slide, please. So over here, because the time issue, I have no time to go through all the details and their policy stance on key issues. But if you are interested, please feel free to take a snap on the chart and dig into it after this. So what I want to point out is, as we head towards the election, actually two main questions come up. When and how should we express our views on the US election? Well, I believe that after the second presidential debate, which is currently scheduled on early October, the market will have a clearer idea of the potential outcome or who will take the White House if one party like the Democrats or the Republican will take the House and also the Senate and also the White House. Like people will have a better idea of the potential outcome, and this will help them to better trade the market. Yes, let's get this part, no time. So overall, as I mentioned earlier, the range of outcome of these narratives are quite broad, and it's really hard for us to price in any certainty at the moment. So I would say the market environment in Q4 would be like in high volatility. So under these circumstances, how do we find the right trading? How do we find the best expressions of our view? Well, I suggest focusing on assets like you are familiar with, and most importantly, those assets are responsive to the market narrative we just covered. Actually, I feel like most of us won't hold our position for a quarter. It's insane. It's crazy. And I know many of us will do 20 trade a week or even a day. So I'm not giving any, seasonal levels because it's meaningless. It's a quarter. It's 3 months. Like the world can change in 3 months. So I will just share some of the insights on where I see risk leaning. So the first thing come to mind is absolutely gold, given its inherent value as a hedge against risk. And with geopolitical developments being unpredictable and, central bank coal purchases is more of a long-term strategy of de-dollarization. So in the upcoming quarter, I think probably the thing that can influence our gold trading is actually the interest rate cuts. And the interest rate cuts is largely depends on the unemployment rates, as we just covered. And, it's pretty much rely on the U.S. economy. So if the U.S. economy remains strong and the Fed didn't, show any signals if we need to front load our rate cut to save the market, I think probably gold will see a slight boost. But if in the worst scenario, like the U.S. is going to face a recession, the gold, I'm not make any promise, but I would see gold at $3,000 in that scenario. And let's get to the U.S. equities. So it's a bit more hard to tell, more nuanced, I would say. The right strategy really hinges on economic landscape. So if the economy holds strong and soft landing scenario is still in place, probably we can see some, small cap stocks may be the way to go, especially under the more relaxed monetary policy environment. And on the flip side, if we see economic troubles worry, cyclical sectors, relevant to consumer spending and banking may take a hit in the first. And then we can implement some long-short strategies in the U.S. equity indices, like long tag, short small caps, or long SLF is the big cap banking indicator, and short KRE. KRE is the small banks. It's a type of indices index show the performance of the small bank. And let's do the last part real quick. So probably I will just cover the first one because obviously I think it's most important. So I put it first. So for the important mindsets, actually, when I talk to many traders and many, market researchers, I ask them, how would you decide when to enter or exit the market? Especially when to exit the market. And they give me the answer the indicator some fixed metrics like below X number of days flow, ATR, or what else, moving average crossover. So I seldom heard answers about, I exit the trade based on a profit target. Right? Nobody will do that. It's quite unrealistic and not that smart. But interestingly, some traders, particularly those are currently facing net losses, they tend to trade where they make the break even be their primary goal to decide when to exit or when to enter the market. I mean, trading decisions based on profit and loss can lead to really irrational judgments in extreme situations. And I won't make any guess of why they want to make break even when they are facing net losses. Probably they want to prove everyone they're not wrong. They're not making wrong decision because we're making money by trading. I would say it's okay. It's great, but like everyone makes mistake. If I'm always right, I won't be there. I will be, I don't know, enjoying lunch with Buffett. But it is unrealistic. So what I want to point out here is trades. You get keep on trading the target you are getting right, and cut losses really quickly, and let the winners run. So I'll skip the rest of two dot points. But if you have any questions, any insights you want to share with me, feel free to find me. You know where to find me. I'll be right outdoors. So that's all what I want to cover today. Hope I give you some inspirations and give you some insight to support your trading. Thank you so much.
Thank you so much to you, Dilin. Anyone with any questions? มีใครอยากจะถามอะไรคุณดิลินรู้ไหมครับผมจะแปลให้หรือมีใครอยากไปถามนอกรอบไม่ต้องเขินในความน่ารักของเธอครับ It's just that you are pretty and maybe they're scared.
Oh, thank you.
So they decided not to ask you.
Okay.
Okay.
You're just being honest.
Okay. Yeah. Okay. Maybe later. Thank you so much. ขอเสียงปรบมือให้กับคุณดิลินบัวครับ